even though this outside return doesn't come to a previous new structure high, look left on our chart. Look where it comes to. The tops of our area of consolidation. All right? Is this making sense for you guys? You guys comfortable with these outside returns and how they come into our structure levels? Is anyone not, I should say? Let me ask that, I guess. We're going to get a flood of yeses every time we ask this. Yeah. All right, Moonish says he's not. I hope I'm not butchering your name. What, if this is not making sense, what is it that is hard to pick up about this? I see how far can you historically go back. For structure levels, you can historically go back as far as you want, and that's going to be the difference between, we talk about major and minor structure levels. You want to look for that. You want to look for a recent structure first, but you can zoom out your charts. You can go to higher time frames, and depending on what time frame you're trading, you can look for structure levels all the way back from days, weeks, months. Depends on your trading time frame and your higher time frame.
Yeah, what I would say is that if this isn't making sense, because all he's doing is showing ebb and flow of the market stuff, if this isn't making sense, it's because you're not doing the work. Just flat out is. You're not going in and working on this yourself in the chart. Because if you're doing that and you're spending the time that we say, hey, spend the time in the charts doing this, then it's then it becomes it becomes something that's very doable, and you're just like, now you're saying, well, hey, man, can we move on? I'm so excited. Let's get to some other cool stuff. So we're doing a quick review before we move on, so that anybody who may have missed it, or who on day one, hey, the recording wasn't great and I couldn't be here, we want to make sure we kind of catch everybody up here. Because tomorrow we learn about pattern. We learn the Gartley pattern. And I'm going to talk more about that later, but we want to learn this. So.
Okay, so now it's time. We have market harmonics. We know how the market moves. We know what structure is. We know that when we get these outside returns, it likes to test previous structure levels. Now we're going to add in another filter. Let me delete this from my chart. Actually, I'll keep this on. We're going to add in another filter, and this is going to be one of the few tools that we use in our trading, and it's going to be called the Fibonacci tool. Now, if you're on NinjaTrader, you can go ahead and push F8 or click the little pencil mark up here and go to our Fibonacci retracement tool. If you're on MetaTrader, then I'm not sure what to do on there, but you should be able to find it. Every charting package should have this Fibonacci tool. If it doesn't, you need to ditch that charting package immediately. So our Fibonacci tool looks like this. And this is the time you want to get your pen and paper out, because there are a few important levels that we use in our trading. Now, I know the questions are going to come in. I don't want you guys to worry about, well, why do you choose a 382? Why do you do that? It doesn't matter. I'm telling you that these are the important levels. It doesn't matter why they're the important levels. You just need to know that they work. Now, the main three important levels that I use with my Fibonacci retracement are the 382, so 38.2, get those out the way. All right. Let me clean the chart up a little bit, make it transparent. Or let me get the vertical one. There we go. Oh. I can bring up. I got another chart I can just bring up. Yeah, no problem. Matter of fact, they're on all of them. How do I? Give me one second.
All right, Aki, what we're going to try and do is clean up the chart a little bit, remove those vertical lines so that you guys can see it a little bit better. But there are, we're going to talk about, it may be session breaks or something like that, Akil. It could be something like that. And